Hey, this is my fifth take on this mysterious Windows computer. Anyways, you didn't come here to hear me rag on about Windows again. Anyways, let's talk about things, specifically doing things with Seek and Alpha and how it changes your approach to being without Seek and Alpha and being with Seek and Alpha. Okay, so what we're talking about is um, 10 plus years ago in the last serious recession, I saw a book. I lived in downtown Toronto, and I saw a book on a book stand, how to launch a quantitative business. And I thought, whoa, Dr. Ernie Chan, that's his first book. In that book, I read it, digested it, and I became kind of friendly with Dr. Ernie Chan. 2 hours away, I go down and meet him and hang out and swap tech ideas versus what goes on what he does. That's why I got number two and number three, his second and third book in the original versions. I got a forward from him. He's that kind of guy. He's a really bang up guy. So out of that, when I started doing the HFT stuff, the algo trading stuff, I was number one. When you search anything HFT, I dominated YouTube because no one knew what HFT was and all that stuff. I was going through all that. Anyways, over time, you learn, you post, you learn, you post, whatever. Some like it, some don't. That's fine. So around 2016, 2017, what started happening was when you start saying stuff, political, namely, and they don't like it, meaning the agenda, as I call it now, you will get demonetized. But I'm still monetized. But what they do instead is they kind of either suppress my channel. At the time, I've had two very early day viral videos going, and they got removed from YouTube. That's when I knew something was not right. That was not long ago, but way before that, I started getting suppressed. That's why you only see 20, 40, 50 views on my YouTube channel. So that really got to a point in the last 2 years and just financially getting dried up because the whole audience that what people want to learn about automation has totally changed. People want stuff for free. People will view you because it's so competitive now. It's to a point where it's next to impossible to do well on it. You get the frat boys that come in, as I call them, the hot doggers, and they just totally pollute the industry and education, namely putting out all this junky crap, and then you get kind of thrown in that, which the whole people that are buying get very skeptical, and then they start looking at things like, well, do you have a track record? Do you have a why are you only getting 50 views? So people just say, no, he's no good. All right, so that's fine. So you got to start to look at to adjust to where we are today with the competition. People want stuff for free. You got to adjust. So what I did was in the last since August, just so everybody knows, it's the 15th of October now, mid-October. So about 2 months ago, let me see here. There we go. So I put up, started playing around. Now this is my profile on Seeking Alpha. Okay, so let me go over to wherever my search engine. If you do Seeking Alpha Quant Labs Research. That's me. That's my profile. Okay, right here. All right. So, namely, what's important here, I had old articles on 2012. Some of them did really good, but it wasn't as many writers back then. But to make money on it, sorry. I was making way more money on YouTube. I was making way more money on the courses and the memberships I was running. I was doing pretty good back then. So this became a low profile. And you can see here I lasted July till about October. So not very long. Back in 2012. Okay. I actually got oilprice.com approached me back in that time. Do I want to write for them? I never saw myself wanting to write articles. because I was not in the same pick. I don't know if it was this editor's pick that got it, but there it is. That's how I guess good these articles got like thousands of views. Okay, but I was on YouTube. I'm getting way more than these, and it was way easier to produce videos than go through what I'm about to tell you. So I started tipping my toes back in August of this year, thinking I got to diversify to recoup what I'm not making, right? So I started here in August. So you have to put your little call out, sell, buy, hold, or whatever, right? So out of that, I started working on ETFs a few months ago, and they're great. Great way to look at the markets, right? But these don't get views. They'll get a couple hundred views, but they still blow the doors off of what I get right now on YouTube or any other social media, right? So up until this point on Tyson, which was the end of September, so just over 2 weeks ago, this one did okay. It got, I think, 300 views in a very short period of time. Then a director, I guess, sent out a mass email to contributors. Director of community, something like that. Really cool guy. This is what I love about Seeking Alpha. Like they are high quality, really good in responding, right? So here, I go, dude, I'm not getting my articles approved. I gotta go back 3, 4, 5 times. They're not getting approved. So he said, okay, here's an outline you can use. So you go from this article to that article, kind of this one to that one, right? This is Tyson Food to this one, which is Barrick Gold, Gold, not the other one, the Canadian one that nobody follows. And basically, you can see the number of comments gets more, right? So this article has a sell on what should be Gold. Let me do it this way. Seeking Alpha. Okay. Yeah. As for the name of my profile, this is what they told me. I can't use my URL. That's what I use my business. That's a no-go. That's why I have to do, as it says, Quant Labs Research. Okay, with a space. They're pretty stringent on the editing, right? Anyways, so I was showing you Barrick Gold. So that was my first article, right? So if you look, Barrick Gold, you have two of them. Barrick Gold, the Canadian, and GOLD. I don't know why this one got switched over, but this was the Mint one. And the reason for it is pretty simple. My original helps to get this right. So you can see there's 150,000 followers. Now, the other reason why I chose this is because my ETF tear sheets that I've been using for a long time, this came up. This came up with gold. That sector, the junior markets were selling or shorting gold. The bearish and what's the other one? Bearish shorting ETFs were performing, not the long and bullish on gold, which you think should be in this market, but it was the other way. So I looked at gold, GOLD, Barrick Gold, and I ran it with my scripts that I've got with the output. I just put one up on Rumble of all places, on the medicine makers of the world that were to resolve the global sickness. So I've got that style of report on that video. So go there. And when it came to this one, I focused 150,000 followers, sorry. And there's my article right here. And I put a sell on it. People didn't like that because they're gold bugs, right? Fine. Then I put up this one, Coinbase, which was shorting as well. I shouldn't say, I just knew that crypto was not doing well. Ran my script against Coinbase. Thought, hey, I should do an article on that. Controversy again. This one, that's the thing I like about Seeking Alpha. There's intelligent people on there. If the comment they don't like, somebody's going to respond and set them straight. but they do exist here on Seeking Alpha. I'm not going to lie. So you get the Barrick Gold and the Coinbase, right? Some people didn't like that article because they're precious little Coinbase and crypto. Oh, how dare you slag them and put a sell on it. So again, you start running again your scripts, the ETF ones, and you go, oh man, for October, energy is doing really good. So what do? You get an Exxon, right? And I chose Exxon. Now, remember, 2 weeks ago or a few weeks ago, I said, I'm not going to buy ETFs. I don't want to pay the management fees when you buy and you sell. So what I do now is I'll look at certain ETFs that I think are good and they're performing double-digit returns in 2 weeks for the month. I'll look at the holdings of that ETF. This one came up on Exxon among, let's say, Chevron. Just so you know from an educational standpoint, what you need to understand when it comes to these stocks and writing articles for Seeking Alpha, when you submit an article, there's a declaration as part of the submission, meaning that you say, I don't own or will buy this stock in the next 72 hours. And it's their way of ensuring that if you're going to focus on a little stock, like a penny stock, that if people see that, that's going to obviously move the price, and you'd be kind of like, as a writer, be able to front load on that stock and buy a whack load of stock, put a positive analysis on it, and you're going to get people buying in, up goes the price, and you cash out. That was the negative reputation that Seeking Alpha had, and they addressed it. So that's what they have these declaration things for. So when you put up an article, you got to make sure that you have no positions on the stock that you're submitting on, as well as you're not going to buy it over the next 3 days. Because I said, if you're going to focus on a small little equivalent penny stock, which I'll be writing on in the next few days, yeah, so there's that. So with this one, if you look at it, it's a strong buy from the quant score of Seeking Alpha. The Wall Street folks are buy, as well as the Seeking Alpha authors, contributors, a buy, right? So if you look at it a few days ago before the price of oil went down, it was number 4, I believe, out of 4,707 stocks. It ranked number 4. That's how good it was, right? So now you can see that this starts to move. But I got that article in there a little earlier. So let me go through the numbers of views, which is big difference. And let me say this, why I'm saying this. When you look at educators and content creators, people will look at your views, will look at how many subscribers you have. If they don't see it, that you got like thousands because of social proof, they'll think that you're no good. That's what's happened to me. Because you look at, I might get 20 views on a video and they think that you're crap. It's nothing to do with that. What the problem is that you got the YouTube AI suppressing you because you don't have something in the video that's not working. There's so many elements to a YouTube video that will drive up the number, and it's primarily on engagement, the thumbnail, the 2 prime ones, and if they don't get the attention of people, your video is no good. So it's driven by that. So I used to put out videos that did pretty good on YouTube, and I haven't changed. I'm not changing my way of doing videos on YouTube to address to get more people. It's just logically, I blow my brain out of frustration because it is all random. I hate saying it because the model does not work all the time. You could put up 100 flop videos and then get one video viral. Okay, so people look at that as a way to measure if you're good or not. But here I am going to give you the numbers now. The difference between the two. So this one article's pushing 2,000. That was put up 9 days ago. This one's about 900 views. Okay, and you won't see that, but I see it. But as a person on Seeking Alpha, look at the number of comments. Okay, the number of comments says it all, right? On how well that video, that article does, because that's engagement. So, thing is that that's how you have access to it. But I want to show you the numbers on the difference between crappy YouTube and Facebook. And you're going, why am I posting stuff on YouTube? I do it to get, because as the occasional person, and there's still followers of mine, as well as I get the occasional number one source still for opt-ins. So I have to feed the baby, man, to grow it. Even though it's still a pain in the ass, but I'm going to still complain about it, but whatever. But you do get better response, better engagement, and a bigger audience than anywhere else but on Seeking Alpha for the right audience, because these are traders. A lot of them are investors and traders. Now, well, so much I could throw at you. Anyways, this was 2,000 views. This is 900 views so far. Look at the dates. But this is where it changes. These are sells. This caused some controversy because I'm putting a sell on people's precious gold when my ETF scan thing is saying, no, it's shorting, it's bearish on those ETFs, meaning the big ones like Barrick Gold are a sell. So that's I put out an article to support that. Coinbase, same thing. But this is where it changes. Exxon is one of the stocks or sectors doing very well in the world of all of the sectors out there. So as I said, this one's at 2,000 views, roughly in around there. Okay, and that's Exxon. So again, the pharmaceuticals came up, and a lot of them are not doing well. So I put up a short on that. But again, look at the view. Oh, I've already done this. So I've shown you the number of followers, 150,000. Okay, for Barrick, and then for Exxon, it's 440,000. So it's 3-4 times bigger, somewhere in there, whatever. So this is going out to 45,000 people in real time that are watching this stock. And within a few hours, it's going up. And usually these will get posted at like 2 in the morning. This will get notice probably in a queue of a lot of people on Seeking Alpha, right? So this one gets about 2,000 views. And there's a lot of a lot of comments on this one. So this one got 8. I think this one had low amount of comments because it's positive, right? People like controversies. They'll comment on that because they don't like the article, and they'll say, you're no good. You don't know what you're talking about. Okay, but but this stock is still down. I mean, what don't you get, right? And then this one came up, the Johnson & Johnson. So that was the 14th. So that's yesterday, right? Woo. Okay. So that's all fine and good, right? This one did about 800-900 for a pharmaceutical. But then this one came along, Realty Income. Now again, I never heard of this company. I don't know what this company is. So it's a real estate real estate income trust. And over this time, you're learning how to work with Seeking Alpha and the audience of Seeking Alpha. The funny thing is it totally changes your view on trading. So I've gone from like a day trader or a sub-second algo developer trading and doing all these quantity mathy things into more. You want to make money? Invest long term. Okay, and that's what Seeking Alpha wants. So I had one article that listed a table that had daily, weekly, monthly of analyst recommendations, but that same table had 5 minute, 1 minute, an hour, 4 hour, whatever. The editor goes, we don't want that. We only want a day, weekly, or monthly. That's what Seeking Alpha wants in their articles, nothing less. So that takes out the intraday day trading. So right there, your whole mind shifts. Your whole mind shifts, going from day trading to investing. And this site has 21 million people on it. So if you want to make serious money, if you really want to make serious money, it's a mind shift. I know. So now I don't look at it as algo trading anymore. I look at it as investing. But if you do the value investing analysis that I do, that takes away a lot of things. So I've shown you the Exxon, right? That's doing pretty good. Now, another thing that's important is this one came up Johnson Johnson because, as I said, I don't want to trade ETFs anymore. I want to trade some of the holdings in that ETF. This one was Johnson Johnson, had a short, and I wrote an article about it with a sell. Well, not really a sell recommendation. Long term, it looks good. Short term, I don't know. But you can see that had a few comments in there. But if you notice, the comments jump when you go sell because somebody's going to get touchy on it because, hey, I got an investment on that. Well, let me introduce you to the one article that's getting a lot of heat. 58 articles with a sell recommendation. I'll let you go through the comments, and I'm not going to mention these users, but you can make your own judgment out of it. Okay? But what I learned from this article when it comes to this company, Realty Income, right here. This just blows my mind. Let's see. Okay, where's O? So I'll pull up the big chart for you, right? Now you tell me, okay, this is a real estate income trust. You tell me, this is a yearly view, okay? A yearly view, okay? Does that look like you'd sell the stock? Yeah, you would. This is raw data and just a chart. Just looking at that, any monkey brain will go, yeah, I'd sell it. I don't want to hold it. But guess what? People got so angry because of this one article on the sell. No different than any other ones. So this one really lit up on Seeking Alpha with 58 comments. And remember, this article was posted yesterday. How many views do you think this got? 4,200 views, okay? I'd say I'm more on the negative side. So what I learned from this article, and this is what amazes me about investors, trading, whatever. I don't want to say they're playing with a full deck, but I'll let you figure out what I'm trying to say. So here you got a stock that's doing this. This thing dropped from $75 now down to $55. Why would you get angry on this kind of article? Go figure. So what happens? There is so right here, this is a marketplace right there. One of the top people in the marketplace, I'm not going to mention names, but you can read in the comments. What happens is that person's got over 100,000 followers. 100,000, and that whole newsletter thing, he's charging money on with a discount on mine because these REITs are not doing very well right now. He has to put a discount on it. But you go, why would people get angry on this kind of article? You know why? Because they're paying money, and a lot of them are retired, approaching retire. I don't know. And that a lot of Seeking Alpha audiences like that. But here's the thing. This article PO'd a lot of people off. Okay? So they see a sell on what they depend on because this stock is paying out a 5%, right? And again, you go through the article, you go through the comments, okay? And you'll learn a lot from the ones that kind of agree with what I'm trying to say. And basically, majority of them are PO'd because how dare you knock this stock and I'm getting dividends from 5%. That's the only reason. They don't care about the stock performance. They don't care that REITs are not working right now. They don't care as long as that little dividend incomes and they're happy with it. So my point here in this video is just overall about learning trading, just investing. There are people that are married to this trade, this company, the industry of REITs, and a little dividend that pays kind of like nothing. And it blows my mind. And the other reason is that they're heavily invested in this third-party newsletter found in the marketplace. And I'm not here to criticize. I don't even know anything about it. But I will tell you, it works. But right now, it's not working. You want me to show you the chart again? There it is. That's a good drop of probably 25-30%. I'm not the best at flying off the figuring out the math, but that chart's not looking good on the stock, and they don't care about that. All they care about is the 5%. Mind you, right here, if you look at this one, so this company's paying 5%. And remember, how did I find this company? And remember, it's got over 202,000 followers on a company that you probably never heard of and I never heard of, especially in the REIT business. And this is like the gold standard. This is not residential. This is commercial property where they go in, buy a piece of land, put a strip mall in, and lease it out. All right. And I think they have some kind of REIT fund that they pay out as well. So that's how they operate. So yes, REITs did work. If you look at a 10-year, looks pretty good, had its low point, and that was back in 2020, last 2 years ago when the thing hit. And it's still not fully recovered. I don't know why you want to hang on to it, but whatever. But they go on about this dividend at 5% that they pay out. That's pretty good. But here, if you read my article, this one right here, I put a buy on. In here, if you look for dividend income, right here, long-term dividend may rise, okay? So in here, in one of the tables, I said dividend expected to climb at that time. So here's what I'm referring to. When you look at the table here, and again, these are not my numbers. These are from Business Insider, okay? I'm not calculating these. But look at the revenue for 2022, $450 billion. Sweet. 2023, and these are all projected by maybe the company, somebody's projected them. 424, 344, 311. So what does that mean? Oil company, oil producer, fully integrated, fully horizontally integrated company. They do it all, but they're declining revenue, and same with the share, their share net profit as well. You can see it decline right there. No brainer. So what's the company got to do? They got to put out dividends to stay relevant. So look at the dividend income you're getting going from 358, 371, 382, and then 411. So over time, to stay relevant and keep themselves relevant on the market, they got to pay out dividends. And that's what this other company, this Realty Income, provided. So these people are freaking out because now they're at 5% income. The dividend could be a jeopardy now because their stock price is not doing well. But they claim, and just maybe they may do well moving forward. I don't know. But nowhere in this article that I've done, this one, you won't find anything mentioned about the Great Reset. And I know, I just know, okay, from as I said, the agenda, you will be happy you won't own anything. What does that mean? You won't own real estate, right? So this REIT may not be all that relevant anymore because no one's owning real estate as much. I can't say, but does that mean that this company may not recover? I mean, as I said in the chart, it didn't recover from the 2020 decline, right? And they may go back up. But why would you hold your money holding this? You want constant performance, so you're better off to get something that performs like an Exxon. That's a no-brainer. But some of these people, for whatever reason, don't want to do that. They're buy and hold. That's fine. But my whole point in Seeking Alpha, as you write articles, to do the research, pump out articles, you learn in the process. That's what the whole point of this video is. And just giving you my mindset on some of the experience so far. All right? So right here, you could see these strong buys back in October. I don't know. But along comes the sell and people get ticked off. Strong buy, whatever. But looking at that price, I don't know, right? Now the question, will it recover and how long will it take? Meanwhile, that recovery process, you're going to pour that money in to like an Exxon. And if you're really worried about your dividend, you're only 1.5% paid off and you're still getting appreciation on the stock performance if you are watching it regularly. And at the same time, you're getting these strong buys. So why would you be married to this realty? This is my whole point of this whole video. And it has nothing to do with algos or anything. But the reason I do these articles is based upon what my data tells me from the scripts that I write with Python, right? And they don't like it, and I'm okay with it. But again, that's a big drop, okay? And how long will it take? So far, it hasn't fully recovered on the last drop since 2 years ago, and that's back in April, right? So that's beyond 2 years, right? Still has, and now it's taken another hit. You're kind of losing money unless you're just so married to this frickin' dividend, and they do the buy and hold. Just here. Let me show you another one that I think people should really learn from. Is Bitcoin. Bitcoin's a great example of this. We know over 5 years ago. I mean, look at that peak, right? Like I said, you could throw money along here and along here. You would have made a lot of money, especially if you added leverage and you knew what you're doing. I went from $200 to $8,000 in 2 years. Pretty good performance, 25 times per year along these momentum trades over a couple of months. But look what it has done since. So you get these Bitcoin bros. I don't know if you can blow this up. You get the Bitcoin bros. Buy the dip. Okay, well, I'll buy the dip here. Oh, the decline's going. No, I'll buy here. I'll buy here. It goes up, yay, and it goes back. And then you're buying the dip, and you're just getting blown out. I follow news a lot, and I'll tell you about this trade over since, let's say, 43,000 beginning of the year. In the news, what I was reading, I need a psychiatrist. I can't handle the losses. Or I'm going to jump off a bridge. I don't know what to do. You know, these are the Bitcoin bros that are on Robinhood and just pushing buttons. They don't know what they're doing. They just see a stock going or a Bitcoin going up. But my point is, the people here in this stock in O or realty income are thinking that this will be, let's buy the dip. No one guarantees that will recover if it does. And they think that they still in the long run will get their 5% dividend return. That's never a guarantee. Just here, let's do this. A great one is there. So let's do dividend cut. Okay, dividend cut. Okay. So which stocks lowered their dividend? So there's a whole website dedicated to this. Okay, let's just take a look. All right, so here we go. You know, a lot of companies are going to start cutting dividends to survive, to economically survive. So again, who's to say that this stock in a year from now, if things get really bad on the real estate front or just generally in the economy, or the Great Reset, as I say, you won't own nothing world, how do you know that this is going to come back? And it'll take 2 years by the looks of it, if that. And on top of that, how do you know you're going to have a dividend in a year or 2 years? Right? So nothing's ever guaranteed. Of course, I'm going to get skewered in this video, nor do I care. But this is just a lesson you learn from being on these articles, and the comments are really good. Some of the ones on the positive side go, yeah, if you do your analysis and you do this, yeah, with the inflation, you're not making any money. One was a good one in this article, this realty income, where a guy said, yeah, you're going to get 1%, 5% dividend, and yet you're facing an 8-10% year-over-year inflation. You're still in the hole. So there's that mindset. And the only sector that's giving you a return is the oil, the energy, like this one. That's it. I got access to where I watch over nearly 1,000 ETFs. that are available on Interactive Brokers. What do you think the percentage of them are losing money or returning negative? 90%. And then there's 10% that are positive. And then out of those that are positive, how many do you think? So that's going to leave you maybe 100 ETFs, if that. How many do you think out of 100 ETFs are actually giving you a bull ETF, not a bear or a short ETF? Out of those 100 ETFs that are positive return, how many do you think are going to give you a positive return out of those ETFs right now in this market, October 2022? I would say only out of 100 positive, you'd be lucky to see maybe 20 that are long ETFs giving you that are bearish, or that are bullish and long, not profitable, but they're bearish or shorting ETFs. And the other thing that gets me on the Barrick one, as another example, is this one. It's a fool. Originally, I was going to call this the fool's gold. Seeking Alpha, the editor, didn't like it, so I had to change and moderate the title, which is fine. It doesn't bother me. But the point of this article on Barrick Gold is to give you, these are the warnings generated by a platform that I use, okay, for technical analysis. No consistent historical earnings per share, warning, red flag. No consistently high return on equity, red flag, warning. No consistently high return on assets. That's what this thing generates, word for word, okay? So that tells you the state of your precious gold, okay? This is not paper gold, okay? These are miners, and they're not doing too good on it. Again, look at the price. Let me pull up gold here. Okay, I know this is a long video, but the whole point is to show you gold, okay? Okay, a good example. So you can see gold should not be dropping right now. With this economy, gold price should be booming through the roof. And there's a reason why it's not doing well, because the trading desks that trade gold are suppressing it. They're holding back the performance of gold. I can't remember which banks are getting fined in the hundreds of millions of dollars over it, but yet it's still happening. Maybe in Asia, Europe, I don't know. But gold is not performing what it should be doing. But yet you go on YouTube and you look at the Peter Schiffs of the world. Yeah, gold's the place to go. Buy physical gold. When you have physical gold that costs you money to hold it, it's an opportunity cost that you're taking because you put money into this thing that's losing value when you go back to sell it, okay? And the thing is, that's an opportunity cost that you are losing out on. You are losing out on. And that's an opportunity cost that you could be going back into. I want to make money. Put it into oil, okay? This is a great example. Look at those returns just in one day or a 6 month. Pretty nice return right now. It's flattening out, but if you knew about that right here and catching on, you do okay. But again, there's the gold bugs, the REIT bugs. They get stuck on this stuff and they're not performing. And so the physical gold is bad. Now, do you want to hold gold? I mean, it is liquid if you sell it back to whoever you buy it from, a broker. You can hold it physically, but that's, again, an opportunity cost that you're taking for holding that physical gold, where you can buy something else that actually provides profit for you and a return, as long as you hold that gold and you hold it for that emergency when the world will blow up or whatever. And where do you sell it? Where do you sell it? Like, if there's nowhere to sell it, it's no good to you, right? So there's that. Man, I could go on about it. I'm going to show you two things when it comes to gold, and I call it fool's gold, and this is why. Number one, Yeah, let me think here. I'm gonna go to, of all places, CoinGecko, right? Crypto's a great place. I've been trading enough on Binance to know that there is actually, okay, if you're worried about liquidity, crypto's awesome because you can buy. I've never had a problem where I can't sell a crypto coin, even if the market's dropping. I can still unload it on a repeatable exchange. But this one coin, PAX G, right there, PAX Gold, okay, that's real backed by gold, okay, PAX. And this will reflect the price of gold. So if you're worried about liquidity, you want to get in and out, and pay like very low commission, like on Kraken, and you want to play gold, this is the place to go. PAX G. Now, a lot of people don't know about the company. This is Paxos, okay? It's a gold company. A lot of people may not heard of it, but the only reason I'm bringing this up is because I'm on Interactive Brokers. I'm on Interactive Brokers, and I can trade to get this on Paxos. So here, they do. They're a real gold company. Okay. Let me see here. Yeah, they do precious metal settlement. But right here, if you go under your product, right here, Pax Gold, just to give you an idea, digital asset. Each token is backed by one fine troy ounce of a 400-ounce London good delivery gold bar stored in Brink's vaults. If you own PAXG, you own the underlying physical gold held in custody by Paxos Trade Trust Company. I don't think they would lie to get on Interactive Brokers. Interactive Brokers will not cheat you, okay? So this is a legit company, very legit. You can trade gold in crypto through Interactive Brokers, or if you want a legit exchange, go with Kraken, okay? In the world of crypto, so you can play gold and not have to physically own it, and go in and out with crypto versus, so right here, custody fee. Hello, blah blah blah. Time to settle, instant. Look at this. T plus 2 days, allocated, redeemable, regulated. So again, why do you want to stick in the old school way of buying gold and holding gold, right? Like physical gold that's costing you money and, as I said, opportunity cost, right? Here you can play it in the digital world, in the world of crypto, and be, wow, I can buy gold and have all these major advantages. And here you got all these major producers from the old school world, Comex and whoever else, right? I could go on and on about gold, but yet it's not performing. And another thing I want to show you that's really important to know, let me go over to Finance Yahoo. Okay, very important. Hang on here. Finance. Will that get me in? Yes. Okay, so let's look at GLD because that's supposed to be the closest thing to gold in the world ETF. So here's the thing about gold that you need to really understand. Let's say you do a 5-year, so it went up as it should, and that's between 19 and 20, and that did pretty good. 1200 to 1800, so that's a 50% return, but that's over March 19 to July, just over a year. Pretty good. That's when gold is gold as it should be. But to be truthful, to be really truthful, let me pull this up, the big boy screen. Okay, I'm glad this is existing. So this is gold, the dark blue, right here. The good old virus came along and boom, it went quite a bit on gold, right? So it played around, flattened out. Now, right here. Okay, what happened right here? The world war just could have started when Russia invaded Ukraine. Boom. That's all gold did. And look what happened after, while the war's still going on, gold drops. So again, this is where gold is kind of, in my mind, useless, like this one. Useless. Useless. Did you hear me? I said useless. Not very good. Okay, so you got the this gold play not very wise. Again, opportunity cost. And look what it's done so far. Okay, fine. Now, if you want to talk about not a precious metal, but look at this one, copper, CPER. This is another ETF. So again, what I'm saying is copper is much better performance as a metal than gold. Look what happens. Copper, look at that nice return. So you're only down 2%, right? Versus the same period, you're down 3%. That might not matter, but as you see the spread right here, okay, so right here you're up 17% right there on copper. And right here you're down now, right here I think you would be, okay, so you had 17%, 5%. And look at right here. Now you're down, well, you're down, you're negative, right? But yet, along that way, copper's doing better. Why? Because the world before pre-virus is producing manufacturing, producing things. And copper is one of the 4 base metals when that happens. So look at how hang on. So no, I got that wrong. So gold did outperform copper. Yeah, here. Yeah, no. I'm going to reverse that. Gold is a better play. Yeah. Gold is better. My fault, my bad. So I'm going to renege on that. But no, gold is better. I just wasted your time. Sorry about that. So, but at the end of the day, gold is not a star performer. Okay, no matter what I just said regarding comparing copper. But from my perspective, I would rather have returns, and the returns are in energy right now, and that's all I can tell you there. And if you do want to play gold, I would look at Paxos based upon the advantages that I've given you. Now, the other thing is crypto, which is an important one, is let's take a look at Tether. Yeah, let's look at Tether. So Tether right now as a stable coin, I'm not a fan of. At the beginning, there was no USDC. But Tether was the ingenious one. So let's see why Tether. Please tell me Tether. Now, Tether, is it backed by anything? No, I'm going to decline that. Driving the future of money. Backed and fully transparent. Really. Let's see what else is here. So these are exchanges. Fine, everyone uses it. Tether for merchants. Da 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 da. Fine. Let's see what the backing is or the transparency. So they've got. Let's see. I can't. I don't. I just don't know if I'd feel comfortable. Reports and reserves. Yeah, I would question Cayman banks, to be honest. Basically, what I'm saying is right here for a long time, this thing said for every USDT, we have some kind of collateralized paper to back it up. So back in the day, they were collateralized with the Chinese real estate paper. If you know anything about Evergrande, Tether took a hit and it got exposed. So now they're trying to be more legit by buying U.S. Treasury bills and so on and so forth, money markets, commercial paper, but there is the heavy focus on Treasury because guess what? They're getting investigated, so they got to be now honest, right? So there's that. Then there's USDC. USDC, which I believe is Circle, is the company. USDC. Now, yeah, Circle. Now, at this point, this is a little more honest, a stable coin. But here's my question. Okay, financial system always open for business, high standard, one-stop shopping for managing this digital currency, built for Web3, financial, blah, 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 blah. Okay, fine. Okay, so these are the partners, legitimate, good for them. All right, so Circle. Who is Circle? Well, let's see at the bottom here. They might have company I'm looking for is let's see. Where's Circle? Funny. I can pull it up here. So Circle, I do believe, owns Bittrex because it was first Bittrex. Let's see. Bittrex, the OG digital. They watch too much Andrew Tate. Now I do believe Circle. Yeah. Let's see here. So Bittrex parent company, right? So this is important to know. Parent company. Bittrex, parent company, Bittrex. I guess they must have spun them off. Let me try this. Circle. Bittrex Global. Mike got it mixed up. Okay, anyways, I'm going to move on from that topic because it's not helping me. But one other thing about Circle you need to understand is if you're smart cookie, you know them, right? And let's see where they come up. Oops. What's that? What was it? Oh. No, we don't want that. That's not what I'm looking for. Let's see here. Come on. Uh, let's see. World. Yeah, World Economic. Them and Circle. Let's see if they come up. I know they're on here. Let me go to the site. Just do a search. Okay. Circle. Let's see if it's digital. Let's see if anything like that comes up. Circle Internet Financial World Economic Forum. Right here. This is what I was looking for. Circle Internet Financial. Circle Internet Business of all sizes. This what I'm looking for? Oh. So is that my circle then? Yeah, okay. So this is what I was looking for. So my point is that this company is part of them, WeForum. All right. So be aware of that. And the other thing you got to be aware of is, let's see if they come up. I think they should. This is very important to know. Ripple right here. Yeah, this is the other company to watch. Okay. So when you look at both of these companies that are in the crypto space, just be aware of things, if you know what I'm saying. So let's see if Bitcoin's in here somewhere, because no one owns Bitcoin. Um, See, it's all bad things, I bet. I don't know. I know it doesn't matter. But the point is, um, yeah, I mean those coins and uh, let me tell you what I'm leading to. The Remember I was talking about the great reset. You won't own anything when it comes to real estate. This is what I worry about. Digital currencies, central bank digital currency toolkit. Uh, this is where you're going to really lose your liberty. I'm sure you heard about it, but I'm not going to educate people. People should know about this. That's all I'll say. So there's certain crypto companies we need to be aware of, stablecoin and all that. But where I'm going with all of this is it's not what it seems. I think I might be rambling here, but that's okay. Some people will watch this for entertainment. But when it comes to digital gold, this is a really good one. PaxG, Tether, USDC. Uh, it's good, but they're just digital. With Kraken, uh, you get everything in actual US dollars. So it's a physical dollar that you get, not Tether. I'll give you an example. When Luna collapsed and you were using their AI based a stable coin that collapsed, you lost money. Another thing to be aware of. And when it comes to Tether and USDC, that can still happen. It could just wither away for whatever reason. Panic, I don't know. So if you're going to do crypto, you want to be on a good exchange that makes it easy to trade in US dollar. Okay, so you don't have to worry about stuff like that. And the other thing is, a lot of people don't know when it comes to crypto, um, what you want to look for is crypto exchanges that are good. You want to look for proof of reserve. Okay, proof of reserve is an audit conducted by a third party to show that that exchange has the funds to cover if they go bankrupt, that they could still cover their customers' accounts. So it retains and preserves your account. And if you're especially if you're in US dollar like on Kraken, you're safe because that exchange chose to go through this audit of proof of reserve. Really important. So when you look at Kraken, right? Well, Kraken has done that audit. They've done that and they've declared it. Now, if they were lying, they would be booted out of the they wouldn't be getting registered licenses like here in Ontario, Canada, which is hard to get. There's only 6 exchanges. So they have this audit of proof of reserve. Now, when it comes to other exchanges, let's take a look at good old Coinbase. I could have mentioned this in the article, but the editor was just like, no, people know this already. I don't think people know about this. Um, I've not done this query, but look at this. If Coinbase requires proof of source for a specific deposit, it is a matter of credibility disclosing the original source of this deposit. That's a joke. That's a fucking joke. That is an absolute joke. Okay? Where does it say Coinbase has done that proof of reserve? Ask yourself. I'm on a major search engine right here. I can't find it. And then, okay, just to make myself happy, I'll go over to Google. I'll just go over to Google. Okay, let's do the same thing. We've seen it on Kraken, but let's see Coinbase proof of reserve. Did these pricks get that done? Proof of reserve. Okay, you got Nick Carter. Absolute, what a joke. Absolutely. For a largest. Oh, God. I mean, why would BlackRock team up with this bizarre will rip you off exchange? where Kraken has proven themselves. Not just that, but if you want to know that they are a bank, they have gone through that process as well. So they will become a bank, and at some point they will get that licensing right here for the U.S. So you could sign up, get your Kraken bank. They've been approved. They're waiting for their Federal Reserve routing numbers, and they will be like a bank. Does Coinbase have that? Yeah. No, 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 no. So let's go back over to that article. Okay. Now again, I would never be able to put that into this article. Oh no, no, no. The professionals are supposed to know this. I bet you've never even known about this, right? So I can't mention this. This editor did not want stuff like that in the article. But if you read in the comments, you'll see the Coinbase is getting sued. Okay, I'm not going to say, but this is the difference between a U.S. bank, a U.S. crypto exchange. Kraken, they will at some point become easily a bank. This will change it all. I hope we get this in Canada, and when I go to the UK, I hope I get the same as well. Surprise! I'm moving. That's where I'm born. So let's take a look at another major exchange. I'm rambling here, I know, but while we're here, let's ask ourselves FTX, the other big boy, altruistic founder. All right, so we have FTX Com. Where's it located? Red flag here, Bahamas, and they're a large U.S. exchange. So here we have FTX.com, which means you can't trade on FTX here. And here we go. This is probably the same thing an American will get. Registration of FTX firms not currently available. So they're not approved for my province. So you can't get traded. Let's go over to FTX US. Where are they at? So this is the exchange that you'll be in for regulation purposes. I don't know the difference between FTX Com and FTX US. It's like probably like US, but right there should be a red flag. Unlike Kraken, they don't separate Kraken US, Kraken Canada. It's Kraken.com. You go on, you're Kraken.com, wherever you're from. All right? That's the difference. And I'm telling you right now, you want to be on a safe exchange. I'm telling you this. They don't pay me to say that. I'm saying that from a customer point, a very happy customer. The other thing I can't mention on this article, which I originally put in, was a customer service problems. Oh no, can't mention that in the article. Oh well, right there. But you'll get amazing. I can right now go to my Kraken account and get support right now. But with Coinbase, you gotta wait 24 hours. Like, seriously. And that's the other big thing I like about Kraken versus the old school way. Okay? Because I will tell you why. Because less commissions, faster, and as I say, you want to trade gold, you can do that quite easily with PaxG, right? Okay, so let's sum it up. When you're on a big 21 million trader community like Seeking Alpha, a couple things to take away. You're dealing with really more investors, more people that care about dividend income, meaning retired, more seasoned people because they have the different premium and pro levels. So you do have quite a few. You do have a couple of big profile. One guy I like is I don't remember his name. Clem Chambers. This guy. He's blowing up now. He's a former CEO on ADVFN out of England. Pretty high profile, and he's ex CEO for whatever reason. But look at this. he's posting on Seek and Alpha. So those are the kind of people you get who take this site very, very seriously versus any of the other schlocky websites, including TradingView, okay, or Fool.com. That's why I'm on here, because I'm able to reach people like this. Not Clem Chambers, but pretty, Wall Street people, right? And I like it. And they're a great company. So that's number one. Just get on Seek and Alpha, okay? It's a great company, great website, blah blah blah. But you have to change your mindset from trading to investing, okay? That's a big deal. Another thing is just from contributing to it, and